You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things along with really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 27th day of May, 2026. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. We do 2 live broadcasts every trading day. The first broadcast is our live training room. That one's reserved for members only and those taking their 1-week free trial. This broadcast, on the other hand, is open to the public. Everybody everywhere on planet Earth with an internet-connected device. There's 2 different ways you can join this afternoon broadcast live. The best way, you only have to do it once. Go to mytradingiq.com. Scroll down the page to where it says Noon Broadcast. Click the link, fill out the 30-second registration form, and you're done. What will happen going forward is every trading day you'll get an email about an hour before the broadcast starts. In the email, there's a link, so at 12 noon Eastern, all you have to do is click the link in the email, and it automatically logs you into our platform. Now, the benefit of doing it that way is you immediately have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days you're out of the office, away from your desktop, but you still want to join live. And some days you'll be busy, so you can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. That's the Christian Financial Radio Network since 2005. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there are over 3,000 daily episodes archived for your educational and viewing pleasure. And if you're new to our neck of the woods, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can scroll back 6 days, 6 weeks, 6 months, 6 years, even more, a lot more. Now, obviously, you're not going to watch them all, nor do you need to. But if you're new, it's a great resource to have at your fingertips because it allows you to see how we've evolved over all these years, day by day by day. youtube.com/CFRN. On the left side of the screen is our schedule for each afternoon broadcast. At the top of the hour, 1 p.m. Eastern, Michael will join us for a recap of what happened this morning in the live training room, and then do a little live trading as time and the markets permit. But right now, we'll get started where we always do with our daily devotional. The topic we're on, and we've been on for about a month now, is everyday faith. Today's scripture is Matthew 9, verse 36. I'm going to share it from the NIV translation. When he saw the crowds, he had compassion on them, because they were harassed and helpless, like sheep without a shepherd. Matthew 9:36. Jesus looked at crowds differently. The text says that when he saw the crowds, he had compassion. Something moved within him. Matthew describes the people as harassed and helpless, like sheep without a shepherd. They were vulnerable, easily scattered, easily led astray, easily harmed. But Jesus saw beneath the surface what sin and neglect had done to people made in the image of God, and he was moved. Compassion in Christ is not softness. It isn't feeling sorry for someone. It is strength directed towards restoration. It is the rightful shepherd looking at those who are wandering without guidance. The heart of Jesus sees through to need, to the real condition we're in, and he moves towards us. Being formed by him, responding in his image and likeness, means being like Jesus. What rises in us when we see others? The more clearly we see Christ, the more clearly we begin to see people. Not as interruptions, not as obstacles, not as categories, but as those who are carrying weight, lost without direction. Our compassion for others grows as our own need has been met and our own wandering has been shepherded. We know we are being guided. How can we then turn a blind eye to those who are being misguided? To follow Jesus is to be like him. The heart of Jesus is not dismissive or inconvenienced. Jesus is moved, and he moves toward human disparity. Question: when you look at the people around you, what rises up first in you? Is it judgment? Is it indifference? Or is it compassion moved towards action? Let's pray. Heavenly Father, we pray today that you would change our hearts. Let us see people as you see them. We surrender our indifference, our selfishness, and our pride. Replace our hard hearts with compassion that truly reflects your love. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Wednesday. Let me give you the numbers from around the world. Start here in the U.S. with the cash markets, or the indices as they're called. Currently the Dow is up 171 points. NASDAQ is down 48. S&P 500 down 6. We did put in a new all-time historic high on the S&P futures today. And the Russell 2000 is down 5. So yesterday we had 3 of the major indices in the green and the Dow in the red, and today it's an opposite story. We got the Dow as the only one in the green, the NQ, the S&P, and the Russell in the red. Not by a lot, but red nonetheless. In the commodity basket, crude oil down $3.84, trading $90.03 last, That's a drop of a little over 4%. Gold down $65.60, trading 44.36 last. That's a drop of 1.5%. Silver down $1.79, trading 74.81 last. That's a drop of well over 2.25%. In the Asian markets at the close, the Nikkei posted a gain of 3 points. Shanghai fell 51. And for the Shanghai, that's actually a drop of 1.25%. The Hang Seng fell 271 points, just over 1%. And in the European markets at the close, FTSE up 13, the DAX up 33, the CAC up 34. So we had a mixed day in Asia. It was a green day for the UK. But at the moment, it is a mixed Radio Wednesday here in the US of A. Again, we've got one of the major indices in the green, that would be the Dow, up 171 points. But the other three are in the red. It'll make a little more sense when we go to the charts. I'll show you exactly what happened. Turning to news, an early season heat wave broke the UK's all-time May temperature record yesterday, as Western Europe continues to swelter under extreme heat. London's Kew Gardens hit 95.2 degrees Fahrenheit, topping the previous record of 91.4 degrees set in 1922 and 1944. The heat wave, it's not really global warming. It's being driven by a heat dome, which is a high-pressure system that traps and compresses hot air like a lid on a pot. It can linger for days or even weeks. The effects are especially dangerous in the UK, where only about 5% of homes have air conditioning, and much of the infrastructure was built for cooler weather. The average high temperature for London in late May is around 68 degrees, and much of Western Europe is facing temperatures 18 to 27 degrees above normal. Now, Mercedes, they make a nice car. I've had a few, but the air conditioners are absolutely horrible. Why? Because they're built in Germany. Now that we're manufacturing Mercedes here in the US, I think there's a plant in Georgia. Maybe that's changing. But if you wanted a Mercedes back in the day, you had to put up with the fact that, well, you just weren't going to get a lot of cool air. On the other hand, the best air conditioning in the world, for the longest time, I don't know about now, was a Cadillac. And that Cadillac, that thing blew ice cold. So, London also recorded a rare tropical night, with temperatures staying above 68 degrees. Temperatures should ease but remain above average for the rest of the week. Here in Phoenix, we get to a point in the summer where at night temperature does not drop below 100 degrees. And that is the most difficult time of the year to live in this great city. Even because what happens, number one, all the concrete traps the heat. But at night, see, right now we're still in a pretty good season because at night the overnight temperatures are dropping into the 60s. So that gives everything a chance to cool down. Then once the sun comes up, well, the whole cycle starts again. But as we get towards the end of June into July and August, the overnight lows will be 100 degrees plus. But I guess we live here by choice, so we shouldn't complain. The Trump administration, this is pretty big news. The Trump administration yesterday announced it is considering giving 5 companies access to radioactive plutonium from the Cold War era nuclear warheads for conversion into nuclear power plant fuel. If finalized, the deal would mark the first time the U.S. has given weapons-grade metal to private companies. The Energy Department stores over 50 tons of plutonium left over from weapons programs in guarded facilities. The material can trigger explosive chain reactions. It's highly toxic if inhaled and remains radioactive for tens of thousands of years. The DOE has plans to dilute and bury much of the stockpile, but energy companies say this plutonium could serve as valuable domestic fuel sources for the nation's nuclear fleet. The Trump administration last year set a goal of quadrupling U.S. nuclear power capacity by 2050 to meet rising energy demands. As of 2023, the U.S. gets roughly 20% of its enriched uranium, the most common fuel for nuclear reactors, from Russia. You didn't see that coming, did you? I didn't. On Wall Street or at the grocery store, Americans are about to pay even more at the grocery store, according to Bloomberg. As Americans confront a surge in prices at the pump, another inflation wave is headed for the grocery store. A combination of factors, including bad weather, tariffs, and a dwindling cattle herd, are already pushing up grocery prices at an above-average pace. In April, they rose by the most in nearly 4 years, and economists say the impact of the Iran war and a potential El Nino weather pattern will only add to pressures into 2027. The hit to U.S. household finances from higher grocery bills is said to intensify just ahead of the November midterm elections, amplifying affordability as a defining issue. And to a greater extent than the surge in gas prices, the slower moving food shock will be difficult to reverse quickly because the size of the autumn harvest is determined by planting decisions made in the spring. And spring has already sprung. So, what could make this stock market bubble pop? Goldman Sachs warned in a new note to their clients that the conditions that have marked the ends of past bull markets remain mostly absent today, although some yellow warning flags have recently begun to appear. Two recurring dynamics typically characterize the end of high valuation, high concentration bull markets, according to the work done by Goldman Sachs analysts. The first is an excess of speculative risk-taking that shifts the distribution of market outcomes to the downside. The second is a deteriorating fundamental backdrop for companies that has historically included a rate-tightening Federal Reserve and a weakening outlook for earnings growth. Now, the analyst at Goldman Sachs doesn't think these conditions are strongly in place yet. However, we may be creeping towards them. While he noted that robust strength in the artificial intelligence trade is a sign of excess speculation, sentiment seems less extreme than in past periods when the markets were overextended. For example, retail trading activity remains below historical and recent highs. Well, most people have just been priced out of the market. And IPO and deal activity have been light relative to past exuberant cycles. The Goldman Sachs analysts said it appeared most concerned with the outlook for interest rates as being a deal breaker for the bulls. We got Kevin Warsh in office, but what can he do? Now you're going to love this. SpaceX is not yet public, but the race to own it is already rearranging the ETF market. I've been talking about this for, I don't know, a few months. A new space ETF with SpaceX exposure has surged past older rivals and assets just 2 months after launching, turning a once niche corner of the ETF market into a pre-IPO access trade for one of the biggest expected IPOs on Wall Street. I think it's going to go off at about $2 trillion. The TEMA Space Innovators ETF, which trades under the symbol NASA, has leapfrogged the Procure Space ETF and also the one I've been talking about, the ARC Space and Defense Innovation ETF, or as we call it, ARKX, and the SPDR S&P Kensho Financial Frontiers, which trades under the symbol ROKT in fund assets since launching in March. So it's the big ETF race to own a little bit of SpaceX before it goes public. Starting to think this thing's maybe a little overheated and a little overdone. So do your own due diligence. Consult with your own licensed investment professional before making any investment decision. From Bloomberg, strategist at Goldman Sachs joined peers at Morgan Stanley and Deutsche Bank in seeing a 17% return for the S&P 500 index this year. Earnings growth powered by the AI boom will drive further gains in stocks. The Goldman team, led by Ben Snyder, said they've increased their year-end target for the U.S. benchmark to 8,000 points, ditching a previous forecast of 7,600. And I think I mentioned we put in a new all-time historic high today on the S&P Emini futures, and then we quickly sold off. There may be intervention coming for the yen. The yen fell to its weakest in nearly 4 weeks against the US dollar, inching toward levels that triggered official Japanese intervention last month as markets weighed a renewed flare-up in the Iran war. The yen was steady at 159.4 per dollar, its weakest since April 30th, when Japanese authorities stepped in to buy the currency. The 160 level is widely seen by traders as a threshold for intervention after the yen crossed it last month. So what's that doing to the yen carry trade? They've intervened formally, and the market is fully calling their bluff. That's from Eugene Epstein, head of structuring for North America at Moneycorp in New Jersey. This is not the first time this has happened. In the past, this exact playbook plays out. They intervene and the market says, we don't believe you, and they intervene again and the market says, we believe you this time. I would argue that the market will most likely test the Bank of Japan again. If you recall, Japan was the first country to test zero rates, and they stayed at zero for a long time, and it didn't fix anything. Turning to politics, Spencer Pratt, a candidate for mayor of Los Angeles, is accusing incumbent Karen Bass of violating election law by electioneering within 100 feet of a ballot box. In a video posted to Bass's social media, she is seen giving a speech to an audience of supporters and casting her ballot while being cheered on. Pratt responded to Bass's post on X, stating that his lawyers have filed a formal complaint. Karen Bass just violated election law here. She is so accustomed to breaking the law with no accountability, she even filmed herself doing it. Well, those days are over. We just filed a formal complaint for illegally gaming the election. We must protect our democracy. This Spencer Pratt, he's one to watch. His social media, if you haven't seen his commercials, I know you all remember the Fresh Prince of Bel-Air and that opening theme song and the dancing. He redid that. It's one of the best political commercials I think I've ever seen. And I don't watch a lot of commercials, but it's really good. Just Google Spencer Pratt, Fresh Prince of Bel-Air. It'll take you to the video. You can see the whole thing. It's really, really good. And apparently Hassan Piker has hit a new level of stupid. Along with a host of other lefty organizations like Code Pink, they're both under federal probe for potentially being an unregistered foreign agent. He recently received a subpoena related to a humanitarian aid convoy he took to Cuba. Most smart people, when they're under such an investigation, usually take the advice of a lawyer. Usually that advice is to just shut the F up about it. Then, if they can afford it, public relation firms advise the principal on how to address the issue publicly. How the confluence of these two advice nodes manifest themselves in the target's public statements is typically in professions of innocence with a dash of, oh, this is just a witch hunt, and maybe some appeal to political persecution. The entrepreneurial, see shameless, the smart ones do that. Piker went on his live stream and publicly laid out exactly the foreign funding pipeline the probe was likely hoping to uncover. Presumably after a ton of digging, but no, he just put it right out there. And it looks like New Yorkers are starting to turn on their golden boy, Mamdani. Starting to see a lot of protests in the streets. I mean, what were these people thinking when they elected him? Well, I guess the answer would be they weren't thinking, were they? But now they're stuck with him. Getting him out of office would be probably very difficult at this point. But the guy has no business being the mayor of the New York City? Come on. That's where the Statue of Liberty is. And he wants to turn it into a socialist city, and the governor there wants to turn it into a socialist state. Well, a lot of people are voting with their feet by just simply leaving. Kind of like they're doing in Seattle. It's like, we don't have to take, we have the money. You want our money. We're leaving. Huh. Okay, Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. Over the last 408 weeks, we've issued over 22,300 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less of the alerts being stopped out based simply on market structure. A simple process we teach all of our passport holders. Now, we didn't put anything out Sunday night because of Monday holiday. So since the markets opened Monday night at 6 p.m. Eastern, We've issued a total of 28 alerts. Now, don't confuse the logic alerts with the CTAs. Those are two different animals, but I'll get to that. When Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 11. It gave us 17 actionable alerts, and so far we've had one stop out, which puts us at 6% on the week. Now last week, where were we last week? Last week we wrapped it up with 56 alerts, 11 ever triggered, 45 actionable, 3 stop outs, or 7%. And then that brought us into this week, week 408. Nice graphic Valerie did for week 408. Good job, Val. And the first alert coming out of the gate Sunday night, or Monday night, was a short on gold, which unfortunately came to fruition. Anyway, I'm not going to go through the whole list, but so far the numbers are quite good. So it looks like we're probably going to roll gold today. I always check bar chart to see when it's time to roll, and they're still showing June as the front month, but the Q contract has a lot more volume. So probably tonight, when I do the CTAs and the logic alerts, I'll address that. Now, the logic alerts are designed to help you learn how to read a chart. Every logic alert has an entry price, long or short, an initial target, in most cases additional targets, and then a final trade to target. Even if you never actually trade a logic alert, you can still use them for the purpose intended, and that's to learn to read the chart. Now, we rolled out the Logic 247 alerts about 7.5 years ago. But years before, we rolled out our first alert service, the concierge trade alerts. They're different in a lot of different ways. Number one, they don't come out around the clock like the logic alerts. They're published as a static report, typically 5 minutes ahead of the Globex open each evening. So the Wednesday session began last night at 6 p.m. Eastern, but 5 minutes before the market opened, all of our traders had all of these targets: the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Now, as we go through the individual markets and look at the charts, you'll see these targets drawn out. When you see them, just remember that our traders had them 5 minutes before the market actually opened. So let's go look at the chart. Now, this little arrow is pointing to this spot right here, potential support. I drew that in before we got there. We're off the low of the day, we're well off the high of the day. Now Monday, which was a holiday, oddly enough, we put in a new all-time historic high at 75.69.75. But the day we took that out, or this session, 75.70.75. And then we sold off all the way down to the support. Now, I posted this in the discussion group before we got there, but that's support times 2. When blue and climbing gets directly below price and the black step line gets directly below price, both of those serve as potential support. So this is really what I would call potential support times 2. In other words, there's two reasons for the market to find support there. And it did. But check it out in the discussion group. You'll see what time I posted that. I mean, it's just a matter of looking at the chart and understanding where the market is most likely to find potential resistance and potential support. We should have had a retracement to the BBC here. We didn't. And then we should have had one here, and we didn't. When this thing finally comes crashing down, guys, it's going to feel like the end of the world. And if you watch the talking heads on TV, they're going to tell you that's exactly what it is. Now, of course, we should get support and a bounce at the daily BBC. We should get support and a bounce at 24. But if you look here where the 38 is, okay, right across these tops right here, and these lows right here, see how that all aligns? I think that's where price is going to head. Now, will that be a sufficient retracement to turn us back around? Because remember, Goldman Sachs has changed their year-end target to 8,000, which doesn't look that terribly far away from here. Considering how many months, we still got 6 months left to get there. Or is it 7 months? Yeah. We're in the 5th month. We're rolling into the 6th month. Last time I checked, there was 12 months in a year. So right there is where we opened last night. We ran up, put in a new all-time historic high. Then we came down. We had a red candle at one point, but we found support right where we thought we would. Now we got a doji on the day, and a doji represents indecision. Now, since today's high is higher than yesterday's high, and today's low is lower than yesterday's low, if we close with a red body, that would be a bearish engulfing candle. It's not a perfect example, but it does meet the criteria. So we'll see how we close. Even if we just close right here at the support area, that's going to give us a red body. And the context is good. I mean, context meaning after a big rally, that's when the bearish engulfing candle will often indicate a major reversal. So for the record, I'm looking at 7105 as, we'll call it 7100. Now, I'm not saying that's going to happen tomorrow or next week or even next month. But before we hit that 8,000 target, I think we'll see this. And if it happens in the next month, then we've still got, what, 6 months left, or 6 months to hit that Goldman Sachs target. And by the way, Goldman Sachs is very rarely wrong. So if they say it's going to 8,000, their pockets are deep enough to send it to 8,000. Now, all of the alerts are created on the 30-minute chart. The vertical line separates today, Wednesday. Here's Tuesday. Here's Monday. Here's the Sunday night open. Now, U.S. markets, stock markets were closed, but the futures market was open. And it was really interesting that we put in a new all-time historic high on a U.S. holiday, but we did. And then we took it out today by just a little bit. That right there is the new all-time historic high. 75, 70, 75. And look how much we sold off. The horizontal lines, of course, are the weekly trading zones. They're normally published every Monday morning at 6:15 a.m. Eastern. Once they're published, they're carved in stone for the entire week. They don't change in any way whatsoever. But when Monday's a holiday, they're published Tuesday morning at 6:15 a.m. Eastern. Now the S&P only has one more zone overhead. But here's what I'm thinking is going to happen. See how the step line's crossing red and falling? That's when we get a retracement to the BBC. Price always reverts to the mean. In our case, the mean is green. And it doesn't matter what you trade or how you trade it. Price always reverts to the mean. It's just how markets work. Now, we did take out the long target after the London Open, leading to the new all-time historic high. And then beginning at 8:30, it was just down, down. We didn't quite get to, what was the low here? 75.16.5. The zone is 75.14/15. So I think what we're going to see here is we're going to see price rally up to the BBC. That just stands for bull bear cross. When price is above the green line, we're bullish and expect higher prices. When price gets below the green line, we're bearish and expect lower prices. Higher prices, lower prices. It's pretty simple. So this is where price is headed. What's the high of this candle? So 39 to 41, that would be 2 points if you don't have your goal for the day. But I think we're going to find resistance here. In fact, we might spike the BBC and tap that weekly zone, 75.45/46. And then I would look for another leg to the downside. Yesterday, the high of the day is right at the bearish cross. And again, I posted this and I showed you all the different posts that I had put in the discussion group yesterday, chronicling this kind of as it happened. And so we opened here, ran up to the zone, resistance. When price moves up to a zone, we expect resistance until proven otherwise. When price drops to a zone, we expect support until proven otherwise. So we ran up last night, resistance sent us back to support, and then support sent us up to resistance. And I was running right off that same bearish cross, or the high from yesterday. However, we overcame it, put in a new all-time historic high by just a little bit. And we're always suspicious of just a little bit, a sign of weakness in this case. And look what happened. It all came tumbling down. So this will be really critical right here. If price can overcome the BBC and the weekly zone and the bearish cross, that would be something. And then your resistance would be right here where blue turned to red, 75.61. Then here, then here. I don't foresee that as it playing out that way, but in this market, anything can happen. So you got to embrace all possibilities. I would look for resistance here and then another leg to the downside. The Dow. Here's where we opened last night. So yesterday was just massive. Well, you had pullbacks along the way. You had a leg and a retracement, a leg and a retracement. You see what I mean about the pullback holds more often than not? Okay. So a leg and a retracement, a leg and a retracement, a leg and a retracement. And then we consolidated and we finally got above the BBC. So we rallied up. And that's not an area I would have looked for to be resistance looking left. Here, yes. So we spiked the area just a little bit. I would have looked for resistance there at, what was the high of that candle? Come on. 57.75. And we made it up to 57.97. Resistance, sends you back to support. Support sends you back to resistance. Now, the long target here was based off yesterday. See where the black step line, it crossed blue and climbing to the downside, turning blue and climbing into red and falling. That's an important price, important area. So we spiked the zone. The zone is 5870/75. But I set the long target at 890. And we actually spiked that just a little bit. Yeah, we made it up to 96. Now we've pulled back to the BBC. Remember, the Dow was the only one in the green when I gave you the numbers from around the world. So we got a leg and a retracement. Let's see if we get another leg to the upside. The Russell. Here's where we opened last night and basically just made a beeline right up to the long target, overshot it. I think that's a new all-time high. Then blue and climbing turned to red and falling. That got us below the BBC. We had a leg and a retracement, the pullback held. Then a leg and a retracement and the pullback held. And then a leg and now a retracement. And so, is this pullback going to hold? We're about to find out. If it doesn't hold, you got a bearish cross right above it. Okay, so maybe we spike up to 29.34.35. But I think we're going to see another leg to the downside, one that actually takes us all the way to the short target. And the short target was just based off this area right here yesterday. I didn't go with the bullish cross because this candle had already covered that. It found support at the zone. That's the highest weekly zone. Today's only Wednesday. The NQ. Here's where we opened last night, and we hit the long target by 8 o'clock Eastern. Then we consolidated along the long target, and then we got a retracement, pullback held. As this whole move began yesterday, the pullback held, pullback held, pullback held, pullback held for hours, and then ran all the way up to the highest. That's the highest weekly zone this week for the NQ. 3347/48. We even spiked it a little bit. Made it all the way up to 379. But just like all the other indices, down it came. And on this candle here, we hit the short target of the tick. Now that's based off this right there. We're headed back to the BBC. So markets are rallying a little bit. What does the daily look like? See, we got a little bit of green, a little green on the daily. I think that's going to change, but maybe not. This looks like resistance to me, leading to another leg to the downside. Crude. That's nice to see. This was the open last night. We had a bearish cross, took us right on down to the short target at 91.55. Then we got below it, traded all the way down to 87.77. Price always reverts to the mean. There it is, the pullback held. Now, blue and climbing often will become support when it gets directly below price. Price has already traded through blue and climbing just a little bit. So right here, notice the bottom of this candle. It's just above where this red and falling turned to blue and climbing. If that gets taken out, then the next area for support's right here. You got a wick sticking up and a wick sticking down. And if you lay your cursor right in the middle of the two, 88.85 should be good support. So you could sell 89.15. 89.15 down to 88.85. That would be $300 per contract traded. That would be this little area right here. $89.20 down to $88.85. Jot that down. Gold, yesterday we drew a window of opportunity and we looked all the way back to Friday. Okay, now price was up here when we drew in this window of opportunity. If you weren't watching live yesterday, you can go to youtube.com/CFRN and you can see it live. We record every afternoon session. And the window of opportunity filled very nicely. The next candle even went on down to spike the weekly zone. Support always sends a market looking for resistance. Resistance sends the market looking for support. So we hung out here at the short target and the weekly zone for a bit. The pullback didn't make it to the BBC. Now this pullback held. Here we didn't even get to the BBC. Now we're off the low of the day, but we're about to run into potential resistance right here. And then above that you got a zone. And then you got this high right here. All areas. And then this area right here, where the black step line crossed back to the left side of red and falling. About 44.76. Be conservative and call it, yeah, 76. That's pretty conservative. That's if we overcome the BBC. That's if we overcome the weekly zone. And that's if we overcome that high. We got blue and climbing below us. So that is a positive. Remember, the pullback holds more often than not. Like that, like that, like that. But eventually it trades through. And when you have a lot of blue and climbing chasing price, that's when it's more likely to trade through the BBC. And last but not least, we got silver. Couldn't quite make it to the long target, which was based off the bearish cross from yesterday. When the red line gets below the green line, that's called a bearish cross. So yesterday, you can see we found support at this zone all day. Price kept trying to break down, but this zone held it and held it and held it. So we run up last night. We couldn't quite get to the bearish cross. Again, a sign of weakness. And so down we go. Consolidated at the zone. And then in 1 hour, we dropped 2 zones. Caught a bounce, but didn't make it all the way back to the BBC. Now things have changed. You've got a low, a higher low, a higher low, and a higher low. Plus you've got the support of blue and climbing. So just maybe we trade through the zone, through the BBC. Then you got potential resistance here, here, and here. So it's got to definitely climb a well of worry, but that green body, see how it's shrinking? Looks like we didn't have enough bullish conviction to get us back to the BBC. And when the retracement doesn't make it to the BBC, that's a sign of weakness. So lower prices definitely possible. We're back to the doji, which in candle speak represents indecision. If you've not downloaded The Secret Life of Candles, Google CFRN, The Secret Life of Candles. It's a little PDF I created, God, probably close to 20 years ago. Not that long, maybe 15 years ago. I don't know. Maybe it was 2012. Long time. Anyway, candles speak, if you will, is nothing new. It's not the latest thing to come down the pike. Japanese rice traders invented the whole candlestick way of thinking and trading 400 years ago. So while it's not as old as the concept behind fibs, that's 14th century. Candlesticks, 400 years. All right, to become a member, get a hold of Valerie. You can call her at 949-42-EMINI. You can email her, support@cfrn.net. Just let her know you're interested in becoming a member. She'll send you an email that explains everything so that you can make a well-informed, intelligent decision as to whether or not what we do is right for you. 9 out of 10 new traders fail because they don't have anyone to teach them how to trade. There's plenty of people that'll sell you indicators and oscillators and maybe even an instruction booklet. But they don't show up every day, day after day after day after day for years and actually teach you how to trade. That really sets us apart. And it's the very thing Michael and I set out to build way back in 2006 when we were just a couple of crazy, starry-eyed kids. On top of the 2 hours of group training, and it's interactive training every trading day. As a member, you have access to private one-on-one mentoring. No extra charge. All you got to do is ask. The strategy you learn, the indicators you use as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. As a passport holder, you'll get the Logic 247 alerts around the clock. The concierge trade alerts, typically 5 minutes ahead of the Globex Open each evening. Every Monday morning at 6:15 a.m. Eastern, you get the weekly trading zones. Now, when it's a Monday holiday like this week, they come out Tuesday morning, but 6:15 a.m. Eastern, that gives you plenty of time to get them on your charts before Wall Street wakes up for the week. We've published the zones since December 14th of 2009, every Monday. It's over 16 years. As a passport holder, you'll be able to attend the Members Only Workshop every Thursday night at 8 p.m. Eastern. And you get the golden keys that open all the private channels in Telegram. There's quite a few. Everything a trader needs, all under one roof, one low price. All right, Michael should be showing up here momentarily. So give it a second and you'll be here.
Okay.
There you are.
There I am. Here I am. Okay, were you waiting for me? I didn't know if...
Yeah, we just finished up. So we were
good.
just waiting for you.
All right. Well, here I am.
Well,
Here I am.
all right.
Putting everything over here.
And it looks good.
Here we go. So, good afternoon, everyone. Today is Wednesday, the 27th day of May. It's our final Wednesday of May, 2026. Now, if you've not taken a free trial with us and you want to, go here to mytradingiq.com, mytradingiq.com, click click on the purple button right here. There's no credit card required for this trial. When you click on that, it will bring you to this registration page. All that we ask for is your name, your email, and your phone number. Your name, your email, and your phone number. Give us all that stuff. Down here at the very bottom gives you TradingView login ID. Okay, make sure you give us that, because then we can get the indicators indicating on your desktop for you. So you will want to get that done. Let's see the results today. We had pretty good results today, guys. We hit our 1,200 mark, which is what we want. 2 days in a row over 1,000. That's good. And 3 out of 4 days, the last 3 out of 4. So we're getting back there right now. Didn't have a ton of trades today, but we had a fair amount, 27 trades. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. But today is the 27th day of May 2026. We're up 234 ticks on the NQ, minus 10 on the Russell, plus 5 on the YM, and plus 8 on the ES. That puts it at $1,245 per contract in the morning session. Today it took 7 minutes and 2 trades to get to $1,000 total, or $100 per contract. And we took a total of 27 trades with 5 stop outs this morning. Put us at 81% of our trades this morning will break even or better. Okay, 81%. So on the month now, that puts us at $12,295 over 17 trading days, averaging $723 per contract per 2-hour trading day. On the year, we're now at $91,347 over 87 trading days, averaging $1,049 per contract per 2-hour trading day. Now, 24/20 blueprint, if you were to quit trading when you got the goal for the day, and you would add 1 contract per month. Now, to add 1 contract per month, you have to get $2,000 per contract in profit. All right, so we are all set to add a contract next month because we're in 5 contracts. We have to get to 10, and we're all set. Next week, we'll go to 6 contracts. But so far this year, it would work 13 and a half hours. If you did everything just like I did, had all the same slippage and everything else, you would be up $37,807, averaging $2,793 per hour. Now, you should actually do better than that, really, because you don't have as many distractions aside, or you don't miss trades like I do, and you shouldn't miss trades like I do, and all that stuff. All right, and that is all that. So let's get into the actual trades now. Okay, the YM and the Russell, we hardly had any trades at all on today. We'll start out with the Russell, and we'll probably get them all in one screenshot. Yeah, we do, right there. All the trades in one screenshot. On the Russell, we started out with the stop out, so we're at minus 25. Then we picked up 5 ticks to get us to minus 20. And then we picked up 10 ticks to get us to the high of the day, which was minus 10. And that was it on the Russell for us. During the break, it looks like there was 1 trade right here, the gap down would have been a good trade. 1 trade right here, that looks like it would have been a break even probably. Okay, that was the Russell. Now the YM, not a lot of trades there either. This is all that we had on the YM right here. We started out with a plus 10, then we had a plus 20 that got us to 30, and then we had a stop out that put us down to 5. And that was all of that. We had some pretty good stuff here during the break. A couple of decent trades here, but not too many. The Russell and the YM just didn't give it up much today. The ES today we had a handful of trades, and we'll go back to the beginning on that. Oops, all the way back to the beginning. Here we are. Our first trade on the ES, we picked up 4 ticks on the first trade, a break even, then 10 ticks on the second trade to get us to 14. Then we went to 18. We got 4 more ticks to go to 18, and then we stopped out. That was our last trade of the session. We stopped out, and that brought us down to 8 on the ES. All right. And the ES, it actually kind of has a trade now, kind of. It came out of the overbought. It was actually this one right here. It came out of the overbought back here. Okay. The YM does not have a trade now. The Russell does not have a trade now. Just go through that. All right, so the NQ, we had the majority of our trades today. We'll go back to the beginning on that. And we did have a couple of 36-tick stop outs on the NQ, and we still ended up with 234 ticks. So we had some big wins on the NQ today too. All right, now our first trade of the day on the NQ, we picked up 10 ticks right there, and I think that's where we got the goal for the day. Right there. Then the second trade, we picked up another 9 to get us to 19. Then 10 to 29, then 50 something to 83. And then I think I must have that one there. I think I had the arrow in the wrong place. Because the next one went from 83 up to 134, and then went from 134 to 144. I think this was 144, and then this one right here, we stopped out, went down to 108, and then went back to 122, and 132, and 137, and we stopped out down to 101. Then we went to 115, and 133, and we went from 133 to 143, to 153, to 164, to 212, to 224, and then 234. 212, 234, 224, 224, 234. That's how it worked out at the end of the session today. And this is not a trade right here. Hang on a second. What do I have going on here? I shorted the S a little while ago. We have a huge short going on the S. It's almost near the target, way down there. Sorry, I forgot I put that on. That's 6 points right there. And we just got all 30 ticks on the S. That's a huge gain on the S. That was the short that I told you about right here. When I started talking about the S, the short was right in there. And that just gave me 30 ticks. It bumped to break even and it never came back. All right. Well, let me go and check and make sure that it gave me 30 ticks. But anyway, on the NQ, just write that down. On the NQ, there was a trade here a minute ago. There was a trade back here, not there. There was a trade here. This was the one right here a minute ago. That would have given all 50 ticks if I'd gotten it. So we had some big moves down right there. Let me go and see what I actually did get on that ES. All right, 29 down to 21.50 is what it was. So that is what? 7.5 points. That's 30 ticks. I'll show you. Here it is. So that was 30 ticks on the ES. That's a nice win for today. Now we'll have to really mess it up to end up negative today. All right. So that was it. That's it. Now, does anybody have any questions at this point? If you don't have any questions, then I'll show you one more time how to take the free trial. You go here to mytradingiq.com, click on the purple button. It's going to bring you to the registration page. Just fill it out. Okay, once you fill it out, we'll know you took the trial, and we'll get you going with everything that you need to take the free trial. So let's get back in here and put some more trades on. We've got to go fill out the sheet for that one trade we did today so far. 527. Just put another one of these down below. Probably wonder why I don't just do like 50 of them, right? Then all this would be too far away. So the ES is right here. 30 of those. 1. And the number of minutes today, 20. Okay, so that's going to bring the average up. Copy that. Paste it there. Copy that. Paste it there. Now, yesterday we were at negative $75, so that was a white day. We ran out of time. And this goes up to a 99. And this goes to a 99. All right, there we have it. So we brought up our average a little bit today, and our average number of trades should have gone up. I don't think that number is calculating right. What is this down to 700? Yeah, it's not calculating right. That should be down to, let's do it down to 721. There. 16.5 minutes is what we're averaging in this afternoon session. 16.5 minutes of trading time. So let's get in there and play some more if we can. Anybody have any questions at this juncture? Anybody? No. Okay. President Trump. Okay. That's pretty obvious. So how does one go about destroying enriched uranium? I wonder. That was what President Trump just said something about. He said he wouldn't be comfortable with China or Russia taking it. You think? Like we need a down close on the NQ. Now this last one did not put in a lower swing right here. All right, it's going to jam it all up as far as the bottom of the bar and the swing low. I'd rather this close up and then the next one close down if it's going to give us a trade at all. I'd really rather don't give us a trade at all. But if it does give us a trade, I wouldn't want it to be just a down close on this because, I mean, it's a valid trade if it does, but yeah, and it is. But you see, the problem is that this is the midway point right here and this leg length down, and this is a higher low right here. So if it's going to continue with the higher lows, then it's going to probably continue right here. That's just saying. Here it is anyway. We'll see what we get out of this. Okay. Hopefully we'll get at least plus 10. Gets down to the midpoint on this leg length right here. That should give us 10. That should be enough. Should be 6.7. Be enough to bump the stop to plus 10 ticks. Okay, that would be about right here if he gets down to the midpoint of this leg length. It'd be great if he continues the trend and gets through the swing low, but if it's going to be a turning point down here, then right here it should get to before it bounces up. Now, earlier this morning, I had drawn in stuff on the NQ. Let me just stop that on it. Earlier this morning, I had drawn in stuff on the NQ where I thought it was going to get back to, and I'm guessing that it probably did. Or maybe it did not. Oh, no, it didn't. It's way up here. This was a 50, at the time, this was a 50% of the big leg down that we had. So that's not even a 50% of the big leg down anymore because the leg was so huge. How huge was it? This leg was so huge. This is what you're looking at. So this shifted down to this. And it's not looking like it's really making any kind of an effort to move back up here. We had 1, 2, 3. This is the 4th time we're down here at this low. One of these times it's either going to completely break it or it's going to completely bounce off it. I don't know which. You guys watching that? Okay. Put this back over here. That back over there. That back over there. That's what I was telling you. I didn't really like that trade. Let's put it over here in the spreadsheet. This 2701. This should be a 2 now with a 1 there. Okay, and the NQ is a minus 36. Back in here. The YM's almost got a trade right here. It needs a down close. It's got a high of 717, so you would be selling 97, 697. And now it's gone. Forget it. Forget it. And now it's got a high of 730. Yeah, it's not going to be a trade. It's too far away. All right, then. Anybody? Questions? Anyone? I'm ready for them. I just had a thought about something. The Russell's at the midpoint. The Russell could actually give us a short. I think everything's going up to flip the YBR except the Russell right now. That's what it looks like to me. That is what it looks like to me. Big gap there in the silver. Completely wrong way. All right, on the Russell now. We have a high over here of 26.4. 26.4. So 24.4 is what you'd be selling on that. 26.5. 24.5 is what you'd be selling on. They all just kept going up. None of them flipped the YBR yet. It looks like the YM is probably going to be the one that flips it. But we'll see. We will see, my friends. All right. Nothing there. Nothing there. Nothing here yet. You have a chance on the Russell. The Russell's the only one that's got a chance for a trade right now. 27.2 down to 25.2 right now. I hope it doesn't give us a trade. It's kind of like the NQ1 was a few minutes ago when I took that. I didn't really want the trade there. But this one does have a lower swing, so it's got a lot of room. Nothing else is going down right now. So let's look out here at the bigger world. $39.80. That gap down this morning. $38.92. XRPs underneath the ribbon. And this is what I had said yesterday. In time, it should get up here to this. Okay, not right now, obviously, but in time. And so that didn't flip the Y bear. It came really close, but didn't flip it. That didn't flip it. That didn't flip it. The Russell could work out. It's not disqualified yet. This is what it looks like. Okay, hasn't filled. All right. That just went too high. This is at 25.9, so it can't go above 27.9. It just went to 28.3, so I'm going to cancel that order. Going to flip the YBR here on the NQ.
So how'd it go?
No, so far so good.
NQ about to flip.
Yeah, it's flipping the YBR. We had a stop out on the NQ, but we had a plus 30 on the ES.
Nice.
So we're up pretty good. And just kind of waiting here. Everything looks like it's going to keep moving up right here. It looks like. You know, if you look at the NQ on a little bit bigger picture, crunch it down like this. This right here is now a retracement of this huge leg up. I've been dealing with this one all day because it's today.
Yeah.
But if you look back to yesterday, this is a retracement of that. So we're consolidating to 50% retracement of this huge leg up right here. So it's really going to make a decision. We've had several bumps on the bottom right through here, right through this area. So we'll see if it finally makes a run here at the end of the day. I'm hoping it does. And when we go look out here at this thing that I drew in here yesterday, if you take this, I drew all these things last month. And I think this one, April something here is when I drew this one, I guess April, May. I guess it was middle of last month is when I drew this in. And we got all the way up here yesterday. And I drawn that in there. April 23rd is when I drawn that in there. This line right here. And we got up to that yesterday. Go to the pullback from that, which I put in here yesterday. We should get up to here, I would think, by the middle of June, probably. I have it out here, June 26th.
Goldman Sachs adjusted their year-end target up to 8,000. today.
Wow.
And today it looks like we could have a bearish engulfing candle, but it's not one that really motivates me. Although the context is correct, just the way it came together. Not too crazy about it.
Now I'm looking at the NQ here.
We took out yesterday's high and we took out yesterday's low.
This one right here. Yeah, if I slide that over,
Yep.
there it is.
I mean, we just barely took out yesterday's high.
And barely took out yesterday's low. It's almost the same candle as yesterday.
Yep.
So it's not showing any strength in either direction right now. I think everybody's still sitting on their hands. I mean, I know we just made an all-time high and all that, but I don't think all the money's in the market right now. We flipped it over here. We came one tick away from flipping it there on the YM. We're about 3 ticks away from flipping it here on the ES, and we're nowhere near flipping it on the Russell. So we just have to wait a few minutes.
Until this Iran business gets cleaned up.
Yeah, but once it does get cleaned up.
Once it does get cleaned up, yeah, then it's a whole new story.
Yeah, then and it will. It'll get cleaned up. And
we normally ignore fundamentals, but something as big as Iran, it's kind of hard to ignore. Technicals still work just fine. I mean,
yeah, we still got trade what's
right
in front of
here
us
in the afternoon broadcast. Yep.
But it's good to have it. You know, I know once it does get cleaned up, that 8,000 level I think we'll go right by that by the end of the year. Once this gets cleaned up.
Well, when I was going over the daily chart of the ES, I'm looking at a 38% retracement, fib retracement.
Mm-hmm.
And that still gives us plenty of time to run to 8,000 by the end of the year, because it's not even June yet.
Yeah, we still have 6 full months, 6.5 full months of trading, 6 and a quarter full months of trading. So we will.
Well, at the end of June, we'll still have 6 months left.
Right. We'll have 6 full months.
So right now we still got 7 months.
And that's what, 4 FOMC changes or 5? 5 FOMC changes for the rest of the year.
Yeah, as much as Trump wants to see Kevin cut rates at the first FOMC meeting,
he'd be lucky to hold them.
I think he's going to have a hard time doing that. If he just holds them, I mean, that would be a plus. Because the other Fed governors actually want to raise rates. So if Kevin can talk him into just keeping it
steady, slow and steady, that's the horse that wins the race.
If Powell would have lowered rates before this whole Iran thing started, the way Trump asked him to do, first nicely, then not so nicely. I mean, Trump wanted a 2-point drop, and he didn't get it.
Trump had he had a plan that he probably couldn't tell Powell about, and Iran was probably part of it. And it's, I'm sure he saw all this coming.
And interestingly, he doesn't seem very concerned by it.
No, he's not. And he's saying even the gas prices, they're under $4 here now, and even the gas prices, he's saying, it's just temporary. And I believe when he says it's temporary, I believe him. When Biden says it's temporary, I don't believe that at all. Temporary inflation.
What's your name call it? Transitional? Yeah.
Yeah, transitional inflation. Yeah. Yeah, right.
And then we ran up to 9%.
Mm-hmm. Crazy. All right. Well, I'm going to wrap it up. It is time to wrap it up. So let's go through this part of it right here. Now, if you have, today in this session, we were down 36 ticks on the NQ and plus 30 on the ES. Pushed up $1,950 on this session. We only had 2 trades. One stopped out, one didn't. We traded for 20 minutes. So in these sessions now, we're up to 16.5 minutes. right? This wasn't totaling down right yesterday, the day before that, the day before that, the day before that. I fixed it. It's now 16 and a half minutes is what we're averaging in these sessions in trading. And in these sessions, we're getting the goal for the day. You know, the goal is $100 per contract. So if you're not able to get there in the morning session, you can always come to this session and trade in this session. Or you can do this as well as the morning session. You know, it's pretty slow sometimes, but sometimes we have a bunch of trades. You know, most of the times we only have one or two, but sometimes we have more than that. Anyway, if you haven't taken a free trial with us, then go here to mytradingiq.com. Click on the purple button. There's no credit card required. Click on that purple button. It's going to bring you to this registration page. Just fill it out. Okay. Once you fill it out, we'll know that you took the free trial. And well, get you everything you need. All right. Make sure you give us your TradingView login ID down here at the bottom. Get your indicators indicating on your desktop when you give us that. All right. That's it, everyone. That I can pass it back out to fabulous Phoenix, Arizona, in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Okay, here we go. All right, recap of the morning session.
Well, let's see. Today it took 7 minutes and 2 trades to get to $1,000 with 10 contracts.
Good job.
Thank you very much.
All right, guys, I covered everything in granular detail already. So if you missed any part of today's broadcast, 10 minutes after I sign off, go to youtube.com/CFRN. And as you can see, we still got that doji on the day. Today's highs, higher than yesterday's high. Today's lows, lower. And what I posted in the discussion group this morning, potential support ×2 right there. Where the black step line, it almost looks like it wants to cross back to the left side of blue and climbing again. After this head fake and this head fake, we still haven't got the retracement. So when it falls, just be prepared. I'm looking for this area right here, really about here. We'll call it 70-90. But if we break that support right there, then we'll see. We'll see how we close today. If we close with a red body, then there's a bigger chance of us opening and heading lower tonight at 6 p.m. Eastern. All right, let's wrap it up with our good word for today. Try fasting. Well, that's something nobody wants to hear. Isaiah 58:6. Is this not the fast that I have chosen? God gave his people the following reasons for fasting: to loose the bonds of wickedness, to undo the heavy burdens, to let the oppressed go free, and that you break every yoke. Fasting is one of the best ways to break the power of the flesh. If you can say no to food, you can say no to just about anything. Growing up, I watched my grandmother fast 40 days at a time. Quite a few times. Fasting can be a powerful spiritual discipline God uses to help bring freedom and clarity. No matter what cause you care about, fasting invites the favor of God because you're putting God ahead of your belly. When you abstain from food to seek God, it shows him you're serious. And he takes you seriously if the cause honors him. Some spiritual breakthroughs are possible only with the combination of prayer and fasting. When you fast and pray, the synergy is more than the sum of its parts. If you feel like your dream is in a holding pattern, try fasting. If your marriage is in trouble and you need things to turn around, try fasting. If your heart is breaking for your kids, try fasting. If you need a breakthrough in any area of your life, try fasting. If you need to make a big decision, try fasting. Fasting breaks strongholds and yields breakthroughs. It's the way we declare to God that we need Him and want Him more than food itself. It takes tremendous discipline to give up food, but doing so cultivates discipline in other areas of our lives. The best way to kill sinful desires is by starving them to death. That's precisely what fasting does. It doesn't just weaken your physical body, it also weakens your sinful flesh and simultaneously strengthens your spirit. Now, some people, for medical reasons, should not fast, completely abstain from food. There's blood sugar and all that to think about. And there are many types of fasts. You could say, let's say you have a habit of you got to go to Starbucks every day. Boy, life just wouldn't be the same if you didn't go to Starbucks every morning before you go to the office. You could just simply say, God, for the next 30 days, I'm not going to go to Starbucks. The time that I would spend in Starbucks getting my $9 latte, I'm going to spend that time focused on you, praying. Maybe there's a certain food, or maybe you just want to skip one meal a day. Maybe you just fast lunch, or maybe it's dinner. Pray. Let God show you the way. He's there, He's listening, and He'll respond. And that's our good word for today. Probably the only thing people hate hearing preached more than fasting is tithing. Yet we both know that they are both good for us in so many ways. You never tried it? Give it a try. You can do a 3-day fast. It doesn't have to be 30 days or 40 days or, not everybody's Granny Reeves. I don't know how she did it. She did drink water during those 40 days. And she lived to be 96, 97. So, she also never drank or smoked, so that may account for part of it. Good for you physically, good for you spiritually. Thanks for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.